Hello, this is Jenny Clark with Solvability, and today I'm going to continue talking about companies that want to go virtually vertical in the federal contracting space. These are small businesses that are ready to grow, and that's going to be the theme of the Florida GovCon Summit, which is coming up in 2018 in Orlando, February 28th through March the 1st. We sure hope you can be there with us. The question is, are you ready to grow virtually vertical in 2018? Do you have established strategic relationships? Do you have brilliant past performance? Are you a recognized industry leader and a sought-after teammate? You might be subcontracting now, but you're planning to be primes in 2018, 2019, while still managing your growth to stay in the small business categories. You're preparing to handle complex contracts, including cost plus, that are technically challenging, that you're uniquely qualified to execute, and you know how to get the employees that the customer wants. Your focus is on growth, and that means you need to have a pricing, cost, and system strategy to bring in 5 years of recurring revenue with one game-changing win. What I've developed is a list of 20 benchmarks. This is from the observation of the 30 years that I spent in the federal contracting industry, working with small businesses and businesses that are larger as well, observing what successful businesses do, what they have in place that makes them able to pivot quickly, respond, have processes they can rely on so they're not held up in their growth because they've got their infrastructure in place, they have their team together, they know where they're going. So what I want to do is talk about these 20 benchmarks and let you start thinking about how you might measure up. What I'm finding is not everybody has all 20 of the benchmarks. We want to go on a journey with you, create a roadmap so you can address them as you go. Some of them are more important than others. Some of those won't even be important to your business at all. And that's why what I'm trying to collect is a list of how small businesses measure up against these. These are not the same benchmarks that you would expect in a large corporation. That a large corporation, responsive to shareholders, has a lot invested. They've been in it for a long time, and they're used to operating at this level. As a small business, every dollar you have is being reinvested in the company, and all of your energy as the owner or an executive in that company is oriented toward how do we get the next win, how do we execute correctly, how do we keep doing it, how do we repeat it. When companies start out in the federal contracting space, their first issues are to get some work so they've got some revenue coming in so that they can bid on more work. And every time you win, there's another, oh, well, we've got to keep going, because slowing down on growth is what's going to, well, it's going to kill you. So these benchmarkings are really almost steps that you want to be reaching, milestones you want to be reaching toward on your path to successful growth as a small business in federal contracting. I've listed these in the order in which I prioritize them. It doesn't mean that these are really the right ones. I'd want you to consider all of these together. Some of them are bigger pieces than others. Some are just check marks, and understand what you need to do to get you on the path that's going to work best for your own company. So I'm starting with one of my biggest things that I work with people on, DCAA Compliance. That's Defense Contract Audit Agency Compliance. Now, as everyone knows, DCAA has been going through some changes lately. One of the biggest issues is they are the audit agency for the federal government. Only a contracting officer can order an audit. They'll only do that if there's a reason for that to happen. But we are seeing more contracts coming out with almost a requirement that you be DCAA compliant, which in some ways violates what I would have considered the fair way to compete under these contracts. But nonetheless, everybody's going to try to shape the proposals coming out, the RFPs coming out, so they have something that somebody else can't qualify for. DCAA compliance means that you're using standard practices that are consistent within the federal contracting industry, and you're also able to pass what's called a DCAA pre-award survey. That's defined with an SF 1408, and if you need information on this, you can go to dcaa.mil and look under the tabs. There's one called Information for Contractors. That's about a 130-page document that has great information about what you need to know as a federal contractor. And one section of that is accounting system requirements. That's the best write-up. Of course, you can go to solvability.com website, and there's other resources for you there. DCA Compliance basically has you respond to a dozen or so items. And if you're not familiar with these terms, it's like reading a tax return. You're like, I don't know what that means. I'm afraid to sign up for this. I'm not sure what we should be doing. That's where solvability can come in. The major components of DCAA compliance are that you have to be able to show that you can segregate direct cost from indirect cost. Direct cost is the cost to work the contract, the direct labor of your employees, the travel that's billable to the contracts, and so forth. Indirect cost is any supporting cost. That's going to be your fringe benefits like payroll taxes and leave and group benefits, your overhead, which is the support cost of your technical workforce, and your G&A or corporate expenses. You also have to be able to segregate what's called unallowable expenses. These are expenses for interest, entertainment, alcohol, contributions, sponsorships, advertising, things that the government says, I'm not paying for that. You can spend on that. It's coming out of your profit, but those are called unallowable costs. All of these things should be set up in your accounting system in a very recognizable, standardized structure so that those costs are grouped into direct cost and then what's called your pools for calculating fringe and overhead and G&A and segregating unallowable. DCAA compliance also means that you're going to be able to track the cost of contracts, of your contract cost by contract, and keep up with the cumulative spend on those contracts, be able to show comparison to contract value. So most accounting systems will do that. Most of the companies I work with start off on QuickBooks, not QuickBooks Online, but regular QuickBooks, and it can easily be set up to be DCA compliant if you follow standard practices and you really understand what you're getting, what your end goal is. The other thing that's part of DCAA compliance is being able to calculate indirect rates. Now, these are advanced cost accounting calculations, and you don't want to grab somebody else's spreadsheet and say, well, I guess I'll just do it this way. You want to really have a good understanding of what those need to be and how you need to calculate them, and you should have a pretty good idea of what competitive rates are. For example, a fringe rate of 10%, I'm thinking something's missing because normally a fringe rate should be in the 25 to 30% range. So anyway, DCA compliance, number one benchmark. What I want to do is help you measure your maturity, find out if you can pass a DCA audit, and what level of support you'd be able to offer when you're called by DCMA, Defense Contract Management Agency, on a proposal that you submitted, and they say, I don't understand how you came up with these indirect rates. Which leads me to item 2 on my benchmarking list, indirect rate projections. You're in a growing company. Your indirect rates are going to change somewhat year to year. As the company grows and you start adding benefit programs like, hey, guess what? We're going to start offering a 401k. That's going to change your pricing. You need to include it in your pricing in future years so you know where it's going to go. If you don't have a way to do indirect rate projections, you're not understanding, tracking, and headed toward competitive indirect rates. Let me give you another example. A G&A rate of 5%, that's for running the corporation. Accounting, human resources, executive compensation, legal and professional fees, bank charges, taxes and licenses. Those costs, if somebody walks in and says, my G&A rate's 5%, you're missing something. Your G&A rate needs to be probably, as a small business, between 8 and 15%. In large businesses, they're spreading over a much larger base. It's going to be lower than that. If you have a G&A percentage that's only 5%, my biggest concern is that you're not recovering enough cost to grow. So indirect rate projections are really important. The other thing we're seeing is if you don't have indirect rate projections where you can show exactly where you are, at least maybe once a quarter, and then your annual, you're going to get locked in to indirect rates that are too low. For example, most of the time, if you don't have a better process, DCAA will default to your last fiscal year's indirect rates. I've had companies that went through a bad quarter, a bad year at the end of last year, and they'll end up having to use those same indirect rates going forward. They had a bad year, meaning their indirect rates were high. Maybe they lost a contract. They didn't have any control over it. It got canceled, or it was supposed to start in March. It didn't start till September. That's going to affect your actual indirect rates for the year because you didn't have the business growth that you expected to at the time that you did. If you don't have indirect rate projections, DCAA could lock you into those inflated rates, forbidding your current year contracts or your future year contracts. And you're not going to win because those rates were too high. You were in a growth phase, you had a bad year, you shouldn't be locked into using that. Indirect rate projections is a way that you take into account some measures of what your budget is, some measure of what your expected growth is, even if you need to, projecting in win rates on some of the work that you're planning to go after. This is something you need to be looking at with every single proposal, because if you're bidding a proposal that's going to double you in size, that's going to have an impact on your indirect rates because you're going to have a G&A rate that's spread over a larger business base, but you have to have something in there to say what would happen if that work was supposed to start in March and didn't start till September, because that sure happens a lot. So indirect rate projections is number 2 on my benchmarking list. Number 3, BD capture proposals. Do you have a process? Do you have a process that's repeatable? Do you have a process that's scalable? Business development, obviously, you've got people making calls, you know what they're going after. Do you have a capture process where you're shaping things, that you're deciding, here's what we're going to go after over the next year? We've looked at the horizon over a period of time. Yes, we periodically update it for new things that come on, but we don't just open FedBiz Ops today and go, oh my gosh, here's something we should bid on. By the time it hit FedBiz Ops, it's probably too late. So BD capture proposals means that you have a process, that you have some boilerplate, that you have some sections that you always include on your proposals about, here's how our accounting system works. Your BD capture proposal process should probably also take into account what is your writing process and who does it, what's your timing, how do you decide how to produce it, what's your graphics, what are all those resources that you've pulled together, and how are you going to do it. So benchmarking number 3 is on the basis of what's your maturity level with business development, capture, and proposals. And because I don't personally work in this level in BD capture and proposals, all I can really do is try to use the benchmarks that I'm collecting from talking to other people to, over a period of time, over the next year, really try to say, based on the reporting that I'm getting from the small businesses, this seems like an issue that many of them want more maturity in. Number 4 is capabilities in web. Companies need to produce a capability statement, so they have a one-pager, or what used to be called a trifold, that they can send that has their cage code, their NAICS codes, all the contact information, what they specialize in, what their core capabilities are, probably a list of previous companies or previous contracts, customers that they work with, and examples of, here are the contracts that we have that we're working on. Do we have this GSA schedule? What do we have? So that at a glance, when they're talking to a prospective customer, they can quickly say, yes, 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 here's what we have. That capabilities document needs to be also included on the website. So the question is, Do you have an understandable capability statement that fits a format that the people that you're talking to are used to seeing and that looks like something that is believable? So number 4 is capabilities in web. Is that something you're going to need help with? Or have you got that down? Or is it mature? What I really find is companies that are bringing in executives or not even necessarily executives, professionals that have worked with large companies tend to be very successful because those people that are coming in from large companies know what it's supposed to look like. And they get into a small business and say, oh, here's what we need to set up. And that's a very successful strategy. If not, you don't know what it's supposed to look like, so you're always guessing and wasting a lot of time. Number 5 on benchmarking is pricing. Do you have pricing strategies? If you're doing work all fixed price, people say, well, you don't really need to know that much about your pricing. Well, heck yeah, you do. You got to make sure that you know enough so that you're making profit. You need to be able to make sure that you're not spending faster than you intended and don't end up losing money on the contract. So you've got to have methods put into that. Most small businesses that I work with on a pricing strategy are really bidding labor categories and billing rates. Your pricing strategy needs to take into account, here's the competitive range for this particular labor category. And within that particular labor category, the question you have to ask yourself is, if I can bill this person out at $90.34 an hour, how much is the maximum that I can pay? The next question is, can I hire somebody with this skill set at that level? Is it going to be competitive? Can I attract them with the fringe benefit plan that I have? How am I going to bring that on? Pricing strategy also means, how do I combine everything? If I'm moving toward becoming a prime contractor, I've got to be able to incorporate the pricing for my subcontractors. Do I have a method for that? Do I know what my indirect rates, my bid rates for indirects need to be? Do I have a deep understanding of what that is? How do you take an estimate of what the overall contract value is going to be and how you're going to deliver on that? So pricing and maturity is a very big piece of the maturity schedule for the benchmarks that we need to be able to work with. If you're going with cost plus contracting, that is a whole new ball game, because every year at the end of the year, you have to prepare an incurred cost submission and settle up your indirect rates. And because of that, you got to be able to track this a lot more carefully. And you really need to know what the competitive ranges are for bidding cost plus contracts. Number 6 is invoicing and reporting. Do you have a way to pump out invoices after every payday or once a month, if that's your billing cycle? Can you meet the formats? Are you having to submit them online? Do you have to put them into iFast? How are you getting the invoices correct and out the door, including all the codes that your customer wants you to have, working on the format that they've required for you? It's one thing when you're small and you can do it in Excel. You can't do as much in QuickBooks, because to be compliant for most of these federal contracts, you need to show not just what you're billing for the current period, but what your cumulative is. That's part of the tracking under DCA Compliance. So be thinking about what you're going to need for invoicing and reporting. Reporting is also going to be reporting that you might have to do your monthly drills. How do you prepare the reporting to your customer? How is that customized to what you said you deliver and what they said they needed from you? Number 7 of benchmarking is integrated processes. You've got a payroll system, you've got a timesheet system, you've got an accounting system, you have the resume database, you have how you're doing proposals. All of that stuff, as you grow, needs to start being integrated, because otherwise you're going to have broken links where you're having to repeat a lot of processes, or you're really creating a process that is too cumbersome and takes too long. There are ways to create systems that will grow as you grow, but you want to have a system strategy for, okay, first we're starting out with QuickBooks and using QuickBooks Payroll, and we're using Spring Ahead for our timesheet tracking. The next level might be we want to use Paychex or ADP. Well, is that going to break a link between your payroll system and your accounting software of QuickBooks? Sure it is. You've got to be thinking about that. When you get to a level where you've got 30 plus employees, in my opinion, you outgrow QuickBooks because there's too many things that you have to do offline in order to create the billing and create the reporting and be accurate. And so the next level up on systems with the companies that I work with tends to be a product like Uninet, which is completely integrated and has the online time and expense integrated to the accounting software, where program managers can be set up to have access to a lot of the reporting they need to answer the customer's questions. So integrated processes, where are you on that? I'd like to be able to say, take a list of here's what we have, here's where we need to go. And then you have to allow yourself 6 months to a year to make that transition. It's a big investment in money, in time, in training to bring one system up to the next. People say, can you do it in 30 days? You can do it, but it won't be done well. And you're going to be struggling with that for months. Number 8 on benchmarking is onboarding of new contracts. Do you have kickoff meetings? How do you decide who's assigned? How do you provide the information to the program manager? What's the transition from winning a contract, having the transition team to help bring that contract on board and make sure what you promised in the proposal is being delivered in the early stages of the contract and implemented into that contract processes so you can deliver what you told the customer you were able to do. What was your differentiator? How you won that contract so that you're going to have good past performance and you're going to be set up to get the follow-on contract. Onboarding new contracts also means how do you bring on new hires and bring them into your company and move them forward. Number 9 is recruiting process. What are you using to find the people that you need to use? Is it costing too much? Are you responsive to the customer? Are you giving your program manager what they need? Do you have enough recruiters to onboard people fast enough? Do you have access to the subscription services to find what you need? How are you determining people's skill sets to lock them in? What's your resume database look like? Your HR process. What does it look like when a new employee comes on board? How do you make them feel like they're part of the company? How do you make sure that they understand the rules and their benefits? Are you just slamming people on and say, here's your handbook and let's go? Number 11 is contract administration. What are you doing to make sure you're keeping track of your reps and certs, you're updating in SAMs, how do you respond to proposals? How do you have your profile set up with your prime contractors that you're trying to work with? How are you responding to modifications? How are you communicating contract changes to the team? How does the program manager know that something's been signed off? Number 12 is program management. How are we supporting the program manager? Because if we're not supporting the program manager, we're not supporting the customer, and that is critical to our success. What do you have in place? Is there reporting you need to put in place? Is the program manager spending all their time doing spreadsheets that should have been produced by the accounting system to begin with as a production line operation and not a custom spreadsheet? What about IT? What's your maturity level with that? Do you have IT staff? Are you outsourcing that? What are you doing to operate in the cloud? Do you have backups? How secure is it? Where are you going with that? Which leads straight into cybersecurity. There are DFARS rules related to cybersecurity that are kicking in on December 31st, 2017. Now, the question is, do you know how to meet those? Those include external assessments. They also include that you've got to have documentation and compliance. You need to be prepared to report incidents up through the chain. And these clauses are coming out in federal contracts. You don't want to be surprised with this. There's money you have to spend, and it's going to be something that you can't just say, hey, IT guy, take care of all this. It's a comprehensive list that you need to be looking at across your organization. FSO process. Do you have the facilities security clearance? What will it take to get there? How do you get somebody that understands the FSO rules and can handle that? Can you outsource that? Number 16 is branding. How do you show up as who your company is? How do you implement that in your business cards, in your shirts, in your trade show information? All of the things that you present, where is that showing up? Number 17 is contract vehicles. Have you got contract vehicles? Are you on GWACs? Are you on GSA? Should you be? What else should you be doing? How do you make it easy for people to do business with you? And is that the market you ought to be in? Does GSA make sense for you? Number 18 is financial capabilities. This is becoming really important. It's becoming a competitive advantage if you've gotten to the point where you actually have secured a line of credit with a major financial institution that is prepared to help you with a letter that says when you're bidding something big, yes, we are prepared to stand behind this company with their growth. And that needs to be a bank that understands federal contracting or whatever financial institution. If you're using a factoring company, your question is, how do I get off of this the fastest? Because you're paying a lot for it. It's a cumbersome accounting process to say, where's our receivables? What's coming in? How do we do that? And you've got to get to something that is more mature, and there are a lot of options out there if you know where to look. And you've also got to have a strength in your balance sheet. We're seeing situations where they're doing more reviews, more financial ratio reviews, and saying, I'm not sure that you've got the financial qualifications for this contract. And you've got to be able to prove it. If I'm looking at your balance sheet and it's got negatives where there's normally positive numbers, I'm not going to have any faith, and anybody you hand it to isn't going to tell you how to fix it, but they're going to tell you, this doesn't look right to me. Immediately, they're going to lower your score in their mind because you really don't understand the financial implications. You may be showing profit on your income statement, but your balance sheet is really where you are. And if that's not accurate, then your profit and loss statement is also not accurate. 19 is risk management. What are you doing to protect your company from risk? Whether it's, do you have insurance? What's your legal situation? Do you have relationships with people that can advise you? Risk management right now, the top priorities are, do you have a cyber insurance policy? Are you getting employee benefit, unemployee benefit, employee action insurance for if there's lawsuits, if there's EEO, if there's whatever could be happening with employees? That's now a separate type of policy. But risk management means having a good relationship with law firms that understand the federal contracting, that they're working with you to address issues as you grow. And number 20 is advanced certification. Some companies need to have CMMI certification. Some companies are going after ISO. What are you doing to differentiate your company, and how are you getting there? Those are the 20 benchmarks, and I've got a benchmark process that we're going to be launching on our website to work with companies and really try to understand and find what the priorities are by surveying and using this benchmarking tool to say, what are the issues? How do you balance them out? Help you develop a roadmap. So Solvability is sponsoring Florida GovCon Summit, which is at solvability.com/govcon-summit. You can register today for the Florida GovCon Summit in Orlando. It's February 28th through the March the 1st, and we have some amazing speakers lined up. We're really looking forward to having you there. So thanks very much for sharing today.